You don't need 20% down to buy a house.
Let's talk about down payments.
You don't need 20% down to buy a house. Okay, that is a huge myth. People will ask us, well, or they'll tell us, I don't have enough to buy a house. Well, do you actually know how much you need to buy a house? Because in reality,
it really depends.
It does.
I mean, it depends on which type of loan you're going to get. So we're going to cover FHA, conventional, VA, I-10s, any loan that you can get. We're going to cover them today.
So, why did I do that? Anyways.
So FHA, how much do we need for FHA?
3.5% down.
Yes.
Of the sale price. So for an example, if you were buying a $100,000 home, then you would need $3,500 plus your closing costs.
And I think first we should also note that FHA is not for first-time homebuyers only. It is one of the primary ones that is used for first-time homebuyers.
Definitely one of the most common.
But you don't have to be a first-time homebuyer to use it.
Mm-hmm. Right. All it really takes, one of the qualifications is that the home is going to be your primary residence. So whether it's your first home or your third home, if you're going to be living in the home, then you could potentially qualify for an FHA loan. Mm-hmm. Another one of the qualifying factors, and the good thing about FHA loans that makes them easier to obtain than conventional loans, is that the debt-to-income ratio is higher than with other loans, meaning that, and typically that's 50%. Meaning that your debt in comparison to what you owe on a monthly basis is no more than 50%.
Right.
Auto loans, credit cards, etc. Mm-hmm. One of the downsides of an FHA loan is your PMI.
Right.
And that is your primary mortgage insurance. So what this is an insurance for the lender to secure the loan. They are not securing the asset, which is your home. They are not securing you as the lendee, but they're securing their actual loan on the property. Mm-hmm. So this is an additional expense that goes directly to the lender. It does not go into your interest or into your principal payment, and that. With FHA
that
loans,
stays with the loan for the entirety of it.
Right.
So
unless you're able to refinance it after you have paid down more than 20% of your loan to value ratio.
Yes. So we'll jump into conventional now. Conventional, there are different down payments that you can put. So you could do 3%, 5%, 10%, or 20% down payment on conventional loans. And the difference with this, I guess, your debt to income ratio
has to be lower.
It does. So about 45% is where they're at.
Yes. So you do have to have less debt on a month-to-month basis in comparison to your income. Mm-hmm. And your credit score typically has to be higher for you to be able to qualify for a conventional loan. The upside to conventional loans is that you can purchase a property with a conventional loan, even if it's not going to be your primary or you're not going to be living in that home. Meaning that if you're looking to buy your second property, a vacation property, or a rental property, then you could use a conventional loan to purchase that. And that's one of the upsides. The good thing about conventional loans is that once you have paid off 20% of your loan, then you are able to hire an appraiser, have them come out, reappraise the property, and you then get rid of your PMI.
Yes.
So that's the good thing about conventional loans, whereas with an FHA, you would have to, again, refinance the entire loan.
Right. So VA loans are great options for any veterans or active military, as long as they have a certificate of eligibility. Mm-hmm. What this means for you is you have a 0% down payment. Now, you have the option to put more down, but this is really I think it's the only loan where you can put 0% down.
That is, it's marketed in the 0% down because we know that there is down payment assistance for FHA buyers, first-time home buyers. There is down payment assistance where you could potentially end up paying 0% down, but the initial
it really
requirement,
just depends.
Exactly, and the initial requirement is going to be 3.5. But with VA loans, that is the expectation, is that 0% down if you have your certificate of eligibility and you qualify and meet the other requirements.
Yeah, so typically on this one, your debt to income ratio needs to be at about 41%, and you need to have a mid-range credit score.
Right, low to mid 600s
mid.
could probably get you in for the most part.
Yeah.
And then lastly, you have your I-10 loan. And for I-10 loans, you only need 10% down in order to qualify. I-10 loans are obviously ideal for people that have I-10 letters from the IRS and who file their taxes with an I-10 letter. So for example, you and your spouse are trying to obtain a loan, and the person with the higher income has an I-10, the person with a lower income has a Social Security, then in that case, the best option is probably going to be going the I-10 route, because you'll be able to qualify for a higher balance. With that being said, one of the other qualifying factors for I-10s is really just having some sort of stable history through a creditor, and in order to consider a company as a creditor, it really only takes 12 months of payments made to this company. So that could either be your rent, your electricity, your gas, your water, your phone bill, etc. And that will establish your credit as an I-10 buyer. Yep. You really also only need your past 2 tax returns among some other things, but 10% down is all you need in order to get into an I-10 loan.
Yeah.
So that's pretty much,
I think that's it.
I think that's it.
So I know there are different factors that kind of affect all of these cases. It just all varies, but that's about the gist of it.
Yeah, at the end of the day, again, you might not need as much money as you might have initially thought of in order to get into your home. So definitely reach out to us if you think you're very close to, or you thought that you needed more in order to buy a home. Ask your agent. Your agent can connect you with an awesome lender who can really break down these options for you and tell you what it is realistically that you're going to need in order to get into your new home.
Yeah. Thanks for joining.
Thanks for watching. Be sure to like, subscribe, and share, and comment below if you learned anything, if you want us to talk about a certain topic, or if you just want to provide some feedback. We'd love to chat with you about any questions you may have.
We'll see you next time. I don't like that.